At the 2021 Global Code Conference, the host asked Musk, "How do you view the situation of Chinese tech companies or internet entrepreneurs?"
So I want to move on to when China, I want to stick with China for a second. You are operating there, selling there. What do you make of what they're doing to the tech entrepreneurs there, the tech moguls?
Where is Jack Ma?
Where is Jack Ma? Do you know?
No, I was curious.
Today, let's talk about the once famous business star Jack Ma and his company. In September 2012, Alibaba Group announced that it had completed the repurchase of half of the Alibaba shares held by Yahoo, amounting to $7.06 billion, approximately 48 billion RMB at that time. Jack Ma has been the long-term actual helmsman of this company. This e-commerce giant raised some of the transaction funds by selling shares to top investment institutions, mainly including China's sovereign funds and three well-known Chinese investment companies. However, Alibaba did not detail the profound political backgrounds of these investment companies. They are Boyu Capital, CITIC Capital, and the investment arm of the China Development Bank CDB Capital. According to the New York Times analysis, the senior management of these three companies includes descendants of the most powerful members of the ruling Communist Party. The Times reviewed documents also indicate that another company purchased shares of Alibaba that month, New Horizon Capital. The son of the then Premier Wen Jiaba was a co-founder of this private equity firm. These new findings only prove that information about the existing shareholders was only minimally disclosed during Alibaba's IPO in 2014, the largest IPO at that time. As part of the usual process for this IPO, Alibaba disclosed about 70 of its shareholders in the filing documents, including major foreign corporations such as Yahoo, the Japanese communications company SoftBank, as well as Alibaba's chairman Jack Ma and vice chairman Zhou Tsai. However, information about other shareholders is scarce. Even if these shareholders do not hold many shares, their influence could still be significant. This situation inevitably raises questions about Alibaba's transparency and operational status. The company is scheduled to go public in the US in a few months. At this point, it would take a massive shock to bring down Alibaba, said Stevenson Yang, co-founder of J Capital Research, a Beijing firm that specializes in detailed analysis of Chinese companies. They have a vast array of allies in various national departments. J Capital specializes in detailed analysis of Chinese enterprises. After Alibaba goes public, these politically connected investors are likely to make a handsome profit. Analysts predict that through this IPO, Alibaba's valuation will exceed $200 billion. At this level, even one of the shares will be worth $2 billion. Moreover, their investments have already performed very well. New Horizon Capital reported that by the end of 2013, the value of its Alibaba shares had reached 3.73 times the initial investment cost. This information comes from publicly disclosed documents, financial reports of Legacy Capital. By the same standard, during the same period, a subsidiary of Boyu Capital achieved over $1 billion in returns on a $400 million investment in Alibaba. Alvin Jiang, the grandson of former President Jiang Zemin and a Harvard graduate, is a partner at Boyu Capital. Among the executives of the four Chinese companies that invested in Alibaba, there are descendants of more than 20 people who have served on the Politburo Standing Committee, China's highest leadership body since 2002. In a country with over 1.3 billion people, this fact illustrates how closely linked political circles are with the highest levels of the financial industry. For instance, The Times reported in 2012 that relatives of Wen Jiaba, including his son, Winston Wen, co-founder of New Horizon Capital, held assets worth at least $2.07 billion. These relationships are not trivial. They help lock in transactions and may give the company an advantage in the fiercely competitive Chinese business environment. Connections with these principlings have also caught the attention of U.S. law enforcement agencies. The investigative branch of the Securities and Exchange Commission and the Federal Prosecutor's Office in Brooklyn, New York, are reviewing whether Morgan Chase's sons and daughters program violated the Foreign Corrupt Practices Act. Through this program, Morgan hired relatives of Chinese officials and corporate executives. Other banks are also under investigation for similar programs. Morgan and other banks have not yet been charged with any wrongdoing. Under the Foreign Corrupt Practices Act, corporate actions must have a corrupt intent or the expectation of obtaining government business in exchange for providing job opportunities. Specifically, Alibaba's shareholding is held by layers of shell companies, often swirling around in tax havens in the Caribbean. Part of Boyu's shares are held by its subsidiary Athene China Limited based in the British Virgin Islands. According to documents submitted by Alibaba to the U.S. Securities and Exchange Commission, Athene is controlled by another offshore entity, Prosperous Wintersuite BVI, whose owner is Boyu Capital Fund I registered in the Cayman Islands. Legacy Capital was established in 2011. As of the end of last year, the company's main assets included shares held in Boyu Capital Fund I, New Horizon Capital IV, and Athena China. These companies are all shareholders of Alibaba. Given such a complex network, it is difficult for outsiders to see the complete ownership structure of Alibaba. For example, Legacy Capital's documents reveal that Athena China invested $400 million to purchase Alibaba shares. However, they do not provide detailed introductions to the other shares of Boyu and New Horizon held in Alibaba. An informed source said that New Horizon was not involved in Alibaba's September 2012 financing arrangements, and its shares were very likely purchased from existing shareholders. Due to the sensitivity of the matter, this person asked to remain anonymous. Robert Choi, a director of Legacy Capital in Los Angeles, did not respond to requests for comment. A female spokesperson for Alibaba in Hong Kong said that the company is in a quiet period before the IPO and it is not convenient to comment. Most of Alibaba's new investors in 2012, including the sovereign wealth funds CITIC Capital and CDB Financial, are state-owned, which complicates the group's ownership structure. As for the state-owned China Development Bank, the relationship is even closer. The bank provided Alibaba with a $1 billion loan to help it repurchase Yahoo's shares. For Alibaba, these relationships lead to the highest levels of government. Two informed sources said that in September 2012, He Jinli was the vice president of CDB Financial. His father, He Guozhen, was then the head of the Communist Party's anti-corruption agency. Due to the sensitivity of this matter, these two individuals asked to remain anonymous. At the same time, the head of CDB was Chen Yuan, whose father, Chen Yun, was a senior official responsible for China's economic planning. From the 1930s to the 1980s, Chen Yun served as a member of the Politburo Standing Committee. In 2013, Chen Yuan resigned as chairman of CDB. Official website reports on He Jinli's activities indicate that as of 2013 he was still employed at CDB Financial. CITIC Capital is one of the investment institutions under the state-owned enterprise group CITIC. The group owns multiple securities firms, banks, mines, steel mills, and oil fields. Before mid-May 2012, another enterprise under CITIC Industrial Investment Fund Management Company Limited was led by Liu Lefei. In November of the same year, Liu Lefei's father, Liu Yunshin, the highest official in the propaganda field, was promoted to member of the Politburo. In March 2014, Liu Lefei was appointed vice chairman of CITIC Securities. Jeffrey Zheng, senior managing director of CITIC Capital, his father Zheng Paiyin, had served as the highest official in China's economic planning field and was a member of the Politburo. The Politburo usually has about 25 members from which the highest leadership body, the Politburo Standing Committee, is produced. Wang Jun, 73, the son of former Vice President Wang Zhen and a longtime chairman of CITIC like Chen Yun, was also one of the 8 elders. These 8 veteran members of the Communist Party led China through the 1980s. Before 2014, Wang Jun also served as the chairman of the board of directors of another CITIC-invested enterprise, a pharmaceutical data company, CITIC 20 Inc. In January 2014, an investment fund company established by Alibaba's chairman Jack Ma, in partnership with Alibaba, acquired most of the shares of CITIC 20 Inc. A representative of CITIC Capital said that the company does not comment on its investments and stated that Liu Lefei is responsible for another department of the company. Representatives of CDB Financial and Boyu Capital declined to comment. Today, years later, where is Jack Ma seems to have become a pertinent question. Alibaba's market value has fallen from a peak of $600 billion to the current $173.04 billion. Jack Ma, as the founder of the Alibaba website and former chairman of the Alibaba Group, has now essentially resigned from all related positions. The situation has to start with Alibaba's then subsidiary Ant Group. If Alibaba is eBay, then Ant Group is PayPal. Regarding the halted IPO of Ant Group, formerly Ant Financial, and its subsequent impact, this is a major event in China's financial technology field and has attracted international attention. Here are the key details of the event: IPO plans and interruption. Ant Group originally planned to go public in Shanghai and Hong Kong simultaneously in November 2020. However, on the eve of the listing, Chinese regulatory authorities suddenly intervened, suspending the IPO. This decision was made shortly after Jack Ma publicly criticized China's financial regulatory system, and although the official reasons were not stated, it is widely believed to be related to his comments. Jack Ma's disappearance. Shortly after the IPO was halted, Jack Ma, the founder of Ant Group, rarely appeared in public, leading to widespread speculation about his whereabouts. Reports suggest that he may have chosen to keep a low profile due to government pressure. Jack Ma reappeared in January 2021, expressing support for rural teachers in China in a video, but he has rarely been seen in public since. Structural adjustment of Ant Group. The Chinese government required Ant Group to make significant adjustments to its operations, separating its financial services, including payments, credit, insurance, etc., from the main company and requiring it to comply with the same capital requirements as banks and other financial institutions. These adjustments mean that Ant needs to raise more funds to meet regulatory requirements, which could affect its future profitability and valuation. Change to a no actual controller structure. Under the pressure of regulation and structural adjustments, Ant Group underwent adjustments to its corporate governance structure, announcing a change to a no actual controller enterprise structure. This change is designed to reduce the influence of a single shareholder on the company, possibly as a response to regulatory pressure. These events demonstrate the strictness of the regulatory environment in China's financial technology sector and the government's determination to maintain financial stability and control over large tech enterprises. The case of Ant Group has also had an impact on the global market, particularly in terms of risk assessment for investors considering investments in large Chinese tech companies.